Okay, now joining us is Professor Dave Collum, and I was just having a look at Dave's Twitter page, and I noticed he's describes himself as a professor of organic chemistry at Cornell, but also as a libertarian, a fan of Austrian business cycle, zero hedge, gold, trigger warning. So I think, Dave, you feel like you're going to be in good company with Patrick. You seem just like him. Welcome to the show, Dave. Thanks for joining us today.
Hey, this is fantastic. I've been paying attention and listening to you guys for a long time.
So I don't know if people are aware, but you write this great year in review, and I was just having a look at the 2019 one, and you said it said something that you've been doing this for 10 years.
Yeah, time flies. It started as this little synopsis. It was about 3 paragraphs long, and then it took off. There were a few sort of quantum leaps, but now it's almost I have to do it. It's kind of a calling now.
And were you always interested in the markets? Like, tell us a little bit about your history of why a organic chemistry professor is busy getting quoted on Zero Hedge about his views on the market.
That's an excellent question for which I have no good answer. I by the way, you should put the disclaimer this should not be taken as investment advice.
Hey, listen, you're on the market huddle. Nothing should be taken as investment advice. This is just all for fun.
Yeah, so I actually thought of going to Wall Street when I was a kid, and then I went off to the ag school at Cornell and thought I was going to go to med school, and then I went off to get a PhD in organic chemistry instead, and then and for 20 25 plus years till the actually till the early 90s, and then I started paying some attention to the markets because I had accrued enough wealth that the boomers all went through that transition. And then I started to notice they were all screwed up, and by '99 I'd exited. Somehow I'd gotten into gold. Boy, I can't recreate the thinking that got me there. But I've been a perma bear ever since. I love the idea of someday being able to buy cheap assets, on sale. But it's just hard. The markets seem way overpriced.
So when you look at the current environment, it must be driving you especially crazy.
Yes, except for the fact that it looks like it's nearing a conclusion. So I'm starting to get fairly calm. The markets look metastable to me, and so I think I'll get options. The real problem I faced in '09, for example, everyone talks about selling in fear, and I didn't buy aggressively out of greed. I had plenty of cash, but the markets in '09 never really plumbed lows. People think they did because they had their heads on fire, but historical valuation showed they were about average, and so I was waiting to buy stuff on fire sale, and the Fed took that away from me. So next time I got to have a slightly different strategy, but then I think it will go on fire sale, and so I'll still eat it. So either way, I think I'm going to lose either way.
So when you say going on fire sale, so are you thinking that we're going to have like a 75% kind of decline, like a 1929 style kind of depression? Is that what you're like where you're coming from?
Well, I'll hedge my bets and say 50. I've been bearish long enough that time marches forward, and so yeah, you have to keep accounting for the fact that markets should go up over time. But yeah, I'm kind of a Hussman type. He takes it down to what 65 or 70% correction. Um, if you're really correct for inflation, all these things, I put it this way, that wouldn't shock me.
So what is the root cause of your thinking that why we're so overvalued, and what do you think will be the trigger that makes that overvaluation return to a regular valuation?
Um, Well, I think the root cause is the Fed, but or what makes me think they're overvalued? Last year, the 2018 year in review, I did a almost a comprehensive valuation analysis where I pulled out approximately 20 valuation metrics, which are always characterized by the price of assets divided by some metric that they ought to track, right? So whether it's GDP or you name it, I came up with about 20 independent ones, and they all show that we're about 2x overvalued. Meanwhile, profit margins are 2x overvalued too. So the profit margins are sort. Maybe that's the fact that now the entire economy is being driven by Facebook. But So if those two things regress to the mean, you got a big problem on your hands. And then if they do damage, you got a worse problem on your hands.
And so, what do you think might be the trigger that would cause that overvaluation to come in? Like, where do you come? Like, so are you just thinking that this is a big bubble that the Fed has blown, and do you blame just the Fed, or is it all central banks, and is it all just from a monetary point of view, or do you think that there's something fundamentally even something other sinister, nefarious kind of in the works as well?
Yeah, it's actually a little of everything. So when I say the Fed, I really do mean global monetary authorities because they all work together. If anyone who hasn't noticed that, just isn't paying attention. But so we quit QE, and the following Monday, the Europeans start doing stuff. Right? It's timed well. Yeah, I blame the Fed enormously. They're trying to distance themselves from wealth inequality problems. I think the wealth inequality is potentially a trigger. A system, this is what being a physical scientist will tell you, is any system that's way, way, way displaced from equilibrium, any system that's metastable, that's not moving, but has a huge potential energy built into it. The more displaced from equilibrium, the smaller the triggers required to set it off. So, right, I mean, if you're dealing with nitroglycerin, you just vibrate it, right? Avalanche, what triggers the avalanche? Who knows? Which wind, which snowflake? So you are safe when it's shock resistant, right? There are companies that I think are they'll get burned, but they won't go insolvent, they won't go broke. But there's weird things out there, right? So you got a 14% of the S&P is said to be zombies. They cannot pay their interest rates on their debt with their cash flow. Of the S&P, we're not talking about the Russell 2000. We're talking about the S&P. So what happens when credit tightens on those companies? You're going to have a massive sell-off. And then the other thing that people don't realize is the reason sell-offs and the economy's turned down so quickly, in my opinion, is that once it starts down, you've got all these asset managers, you got all these CEOs and accountants who've been shoving stuff under the rug and hiding it from so that they can keep getting their bonuses. And now under the cover of a deep recession, they can now start spilling their guts. And so all of a sudden the accountants will say, well, let's write down this. And so all of a sudden, because no one should get fired because it's a recession, they can get rid of all the garbage that built up. So all the bad investments that they did and say, don't blame me. So that's, and then they'll even build up what's called a cookie jar, right? So they'll actually try to, at the bottom, maybe tuck away some money so that they can go back to this appalling behavior of buying back shares to boost their own personal gain. They could even build up some to do that, right? So the sell-off's going to be hard, I think, when it starts.
So, David, it's Patrick here. I wanted to just circle to bonds because recently we've had this big run in bonds and the yields have been just dropping very quickly. What's your take on the bond market and what we're seeing here in interest rates?
Okay, so here's a question I'll ask rhetorically. I'm going to dodge your question because I don't know. People will say, well, that's a sign of recession's coming. I actually thought a recession was starting in late 18, and I haven't given up that idea. When the NBER comes up with its final call on a recession, I wouldn't be shocked if it was actually already in play right now. The question I like to ask people is if you were going to be offered a 30-year treasury and you're an investor, not a trader, you're an investor, right? Which is what they're held by. They should be. What interest rate would you demand if you had to hold that treasury to term? When you guys want to answer that question, what would you require to
Dave?
What would you require to say I'm buying and holding for 30?
Yeah. Okay.
Give me an interest rate.
Dave, this is Kevin speaking. I would demand 8 or 10% because I think inflation's coming. Patrick would demand about, I don't know, 50 beeps because he thinks the world's going to end in a deflationary spiral and that he's going to
30 years though.
Yeah, for sure. He's he's pretty bearish on the whole world. So I just
so you guys are nutballs at the end of the spectrum. I'm with you, Kevin.
So I'm 10%. I feel like I think inflation's coming. So I think you're nuts to lend to the government for 30 years because if you look over time, I always ask people, how many countries do you know that have imploded from deflation? I know zero, but I know lots that have inflated their wealth away. And so I'm just amazed at the thought that you would go and lend to the government that has the ability to create money and create inflation, even though Patrick doesn't think they do.
Oh, listen, you're speaking for me, right? Like,
I shouldn't.
Do I get to chime in my?
No, but you know what? Actually, Patrick, I will say something. Dave,
you guys do this a lot, don't you? Are you guys married? Is this like a gay marriage thing now?
We have something to tell you. We're really coming out. No, so Dave, I wanted to say, I'm going to turn the question back to you. What would you demand?
Oh, it would be a high number. I'd have to think hard about it, but it would be a high number. And I did a Twitter poll on it, and it went viral. It reached out to people who couldn't give a damn what I think. And the Twitter poll put it at a high number. I didn't go ridiculous, so I think it was over 8% or something like that, and that was the dominant answer. So then the question is, if treasuries are currently priced to return 4%, and everyone on the planet says I wouldn't touch those things for under 8%, then are they priced correctly? And the answer is no.
So why do you?
And you say, well, but I don't hold on to them. I go, well, then someone's got to hold on to them. That's a Hussman argument, right? Someone's got to hold on to them. They're not priced right. They're priced like trading sardines at this point, right?
Right. Well, that famous story that everybody knows about the trading sardines is that there was this. I'll just tell it very quickly. There was what was it? I believe it was in the docks in the Netherlands or something like that, and they had a bubble created in sardines, and they were trading them back and forth, back and forth. It was kept going higher and higher until finally the bubble collapsed, and someone got long, and they says, oh well, at least I can eat the sardines. And he opens the sardines and he finds out that they're actually bad. That they've been trading them for so long that there's no longer good sardines. And he looks at the other guy and says, I can't believe these are bad. We've been trading bad sardines all the time. And he says, those weren't eating sardines, those were trading sardines. And that's what your argument is about bonds. So there you go. I completely concur, Dave. Patrick is just playing a greater fool game with his long bond position.
Well, there you guys go at it, bickering in the kitchen again. So the related story is the two farmers selling a pig back and forth for more and more each time, and one finally butchers it, and the other guy says we're getting rich off that pig. So we're trading sardines right now, and the question I've asked countless times is, why is sovereign debt so mispriced? And one of the reasons is there are statutes requiring people buy sovereign debt. There are deals with countries like China that says you buy our sovereign debt and we'll keep doing whatever it is we do, buy all your stuff. And we've got, the Arabs buying our debt, and we get their oil. And so these are the mispricings, right? It's not a marketplace anymore, right? And you say, oh, that can't be. Well, look at Japan. Japan's bond market doesn't even trade anymore because it's such a disaster zone. By the way, I don't know if you saw this. There's a junk bond in Japan that's about to corporate junk bond that's about to trade at 1%. I tweeted 1% for a junk bond.
I tweeted that out, Dave. It was right on Zero Hedge, our favorite site, right? So
yeah, exactly.
but
the conspiracy theorists.
But it's actually a testament to what's happening, which is that yield interest rate suppression or financial repression continues to be the name of the game. And there's just so much debt out there that free price discovery for bonds is just not, in my mind, going to happen without there being systemic risks that are.
So here's the question: can they sustain this forever?
Oh, absolutely not. No. There's an end game.
Okay, so therefore, if they're insolvent now, if they're insolvent in the future, they're insolvent now. I just saw that quote today. They're insolvent.
Okay, so but then I ask you, well, I'll turn it this way: who has an incentive to see the system fail? Nobody, in my opinion.
Who has an incentive to see my lab blow up when something decides to blow up in my lab, right? It doesn't require incentive.
But the point is that everyone has an incentive to keep the existing system going as long as possible. Hence why in Japan you have pretty much zero and negative interest rates for going on for decades. I mean, ultimately, you're right. there's going to be some sort of a reset. It doesn't have to be as doomsday as everyone makes it, but you can't have $250 trillion of global debt without there being some way that this is all reset. And what that will look like is something that I guess I'm not smart enough to fully see as to how it plays out. But in the interim, I just continue to believe everyone's going to be shocked how long they're going to be able to keep it going. I think it's going to,
Oh, I don't doubt that. I don't doubt
and
that.
that's
I agree with
yeah,
that.
and that's sort of the premise of my argument there, Kev. Is that it's not that over time it isn't going to be. It's that it's gonna play out at some point. It's just I personally think everyone's gonna be shocked how long they're gonna keep this repression going.
Well, Patrick, we don't.
Okay, so here's the question though. So your bonds now, you don't own 30-year bonds buy and hold, right? Or do you?
Not
Yeah,
buy and
well,
hold.
Are you a
No, I'm a
big you're
trader.
right? So I'm laddering like 2 and 3 year bonds, right? And I'm finally getting a return. I didn't bother before, right? It wasn't even worth the trouble. I go, okay, I'll take my 0.001% off a checking account. And so now you get off. Let's say you've laddered up to 5 years a year at 2.5%, right? So real return, that's zero.
Yeah.
And then equities are priced to the stratosphere, so the real price earnings ratio is probably going to return you maybe another 2.5%. Inflation adjusted, you're now down to 0%. Your only hope is some dividends, which, by the way, are probably 2%. So we're priced now for you to make essentially nothing, inflation
Yep.
adjusted.
Yep.
And so then the question is, okay, going forward, the economy will grow. So as the economy grows, that's your return now. So your return now from these, if we started high valuations and ended high valuations, which every market in the goddamn world is at, the question is, what is your return? And your return is the cash flow from viable entities, which you've paid too much for, and GDP growth. And so the returns going forward are going to be awful. And if we regress to the historical mean, your returns are going to be absolutely positively negative for a long time.
Yeah.
Okay, I'm going to jump in here because Dave, when we were chatting before the show, you said you have an opinion on absolutely everything. So I'm gonna put you on the spot.
Go for
China-U.S.
it.
trade war. What's going on, and how is it going to resolve itself?
Okay, that's a fascinating one. When it first started, I thought it was just Trump throwing out grenades at China, and there'd be some quick swapping of trade deals, and then it would go away. And now it's starting to look like people are digging their heels in. So my view on it is, and I know guys who hate Trump who say this is still true, and that is, I think that right now our trade relationship with China is out of balance because we set up these great deals for China back in, what was it, 81 or 2 or something, I don't know, way back when I was just a youngster, and we helped them emerge from medieval China, right? And those trade deals are now way out of date. And then, of course, they steal shit from us, and they do all the things that they do. And so as Kyle Bass said, as guys like that say, look, I hate Trump, but we need to renegotiate these things. So his economic policies are correct, and I'm inclined to believe that. Now, however, you've got a kind of a pissing match going on between China and the U.S., and that the longer it goes, the more problematic I think it's going to. Yeah, and it could turn into a mess. My big fear, besides, I'm not afraid of global warming one bit. An EMP would do a number on us. The Yosemite volcano would do it, but a land war, some conventional war with China would be. I'd be heading for bunkers fast.
There you go. So listen, now we're going to wrap it up here. And what we're going to do, if you want to hear more about Dave and all the awful things that could happen in the world, that not including global warming, make sure you stick around for the after hours. In the meantime, Dave, why don't you tell us where they can find you and where they can find your year in review, because that's a great publication that everybody should go and read.
If you search just my name, David Collum, year in review, you'll find all sorts of stuff. But it's found at Peak Prosperity. I discovered this week that my searches are giving me funny results. They're not taking me to Peak Prosperity. So you can find it at Peak Prosperity. You can find me on Twitter David B. Collum. David B. Collum. That's my Twitter name, and got a picture of me, and you'll recognize the feed because it's a bunch of inane things about a bunch of inane topics.
Well, that's great. Well, thanks for joining. Thanks for joining us, David. For everyone else, for everyone that wants to hear more, Dave, make sure you stick around for the after hours.